All right. You blew your account a week or two ago. Oh my god. Is it a small account or a big account? Hopefully a small one. Oh yeah. You'll get back to it. It's gotta trade small when the conditions are alright. I've been trading super small lately. To the tune of throwing one contract. Doesn't matter if it's $100 or $15, whatever the contract is worth, I just buy one. Just to see, if I'm right on the move and then get out if I'm not and book the gains if I'm right. But that's what I've been doing. That's why you don't see alerts on me. And because I had an accident and because we had a week of CPI, FOMC, and quad witching on Friday. That in fact, if you were expecting setups for tomorrow coming in here today, you're gonna get disappointed because there's not a lot, and I mean a lot of this stuff it's gonna be constricted by the quad witching day, which is, I mean, we still have 2 days of trading before. I mean, we still have Thursday, so we can have a normal day and then the quad witching day. I myself today try a little bit of Tesla puts around the open, got a little bit of gains there. Some WDC calls, got out of break even on that one. It worked actually. I went long around this area, worked for a little bit. I got out of break even, like I said. It went later, I went higher, but whatever. And what else did I trade? Some futures on oil and some futures on ES, and also the FOMC trade, which is I'm gonna talk about the FOMC trade today. I'm gonna give a little bit of perspective on the market, just a little bit to where we at, right? Because really, there's nothing that you guys don't know already off of this market, but just to point it out, right? Like, we know about our fifth retracement. We don't know about our 50% bounce on SPX. But I always think like whenever you do a bounce like that of a fifth retracement, you're bound to make a bounce into another fifth retracement level on the other side. So we made a leg up, kind of like a Elliott wave theory, right? So I have in mind that we could actually in the future do something if this is the leg down, hit some targets on the fibs for the way up. So we were almost at the 50%, but not quite yet. We still got room towards that, and then we got room towards the 618. So I have in mind that we can visit these areas in the future, right here. These two areas right here, right? And I have that. We know there's a gap right here on the daily. I'm gonna remove this real quick. We know there's a gap above it right here, so a little bit of a repair of a structure that is needed to do. The market needs to do in the future. We don't know. I mean, we're in the middle, right? So we don't know which one it's gonna go for later. We do have some trend lines, right? This will be considered the uptrend right here, and this is considered the downtrend. We did breach it, right? We've seen it. This is a CPI print, and gave most of it back to only come back down. So a lot of the times this is very bearish, right? Doing a very technical breakout and then coming back into range is basically like a fake out, right? A fake out into, I don't know, but this is not really that bearish until you start breaking this trend line and actually placing a low that will surpass this low right here, all this lows right here. So you have to go below all this, right? We would like to see that be positioned for that to happen, before it happens. So we'll see. Like I said, I'm not putting too much emphasis to anything because we have quad witching day on Friday. After that, I think we could probably have less volatility. A lot of people take off from their holidays or whatever, and it's just we're probably gonna see more technical setups, something that we can play truly for what they are. That's what I'm hoping for the after this week. As of now, this is what we have. Um, we let me see. Now, in respect with the Qs, we're gonna look at the NDX real quick. We know that we bounce at the 618 retracement, just like at the 50 on the SPY. So the same idea is that the Qs may make a bounce. This is where we're gonna put our stuff together, right? We make a bounce from the other side, right? So we have our highs, we have our lows, and this will be the 50% retracement. This will be the 618. So if we do see some areas of the Qs and the SPYs at the same time, like let's say the SPYs are at the 618s and the Qs are at the 50% or at the 32, then it's a possible area for entry short, for the next leg down. And as of now, like I don't think it's we have an ideal short on the Qs, even though I mean the structure is very bearish, and if there's a trend line that the market's been respecting, is this one right here, at least on the Qs, right? So the answer may be on the Qs, even though the ES broke. Now trend lines are very subjective, guys, because I could, if you notice, like I'm anchored at the top, but we do have a peak that we have right here. So the trend line used to be this, and we traded above it, then we came back below it. So I consider this a little very bearish because we broke above it and failed. But now that trend line, what? I mean, we've been trading above it, underneath, so it doesn't matter anymore, right? Now we have this trend line. So how much that matters now, right? It's just subjective, right? That's what I'm trying to, that's my point. It's just subjective. If it was subjective here, it was subjective over here and subjective anywhere else. As of the candle structure and everything, like as I guess if we were to put an uptrend, we are kind of respecting this right here. So a break out of it will be bearish, and a break to the upside will be bullish. So that's what we're looking for on the Qs. Like I said, I really don't see a setup. It's like I'm in the middle of where I wouldn't want to place a trade on the Qs or on the SPYs, really. IWM. Just looking at this real quick. Hold on. Had IWM right here. On IWM, hold on. Yeah, IWM may offer a little bit more of a setup because the weekly is showing a little more clear rejection of the 618. So if we see the last leg down, favorite retracement, we rejected the 618, never closed above it. Now we're dealing with the next leg down. So this may start falling down, So this is one of the things that I'm looking. Is basically a lower high at this point, with this weekly high being below this weekly high. So everything's pointing forward for this to actually make another leg down right here. If it's not best seen on the monthly chart, right? Something like this. The next month, whatever January comes, and have something like this right here. So we'll see what happens. It's something that I'm looking for, at least on the immediate, on the weekly, monthly time frame, for the next month or so on IWM. Because that's where it looks, equal highs right here, lower highs right here. It has to break this low to make a lower low. It has to break this lows to make another lower low. Based on that, I think on the weekly, it's gonna show us that. Yeah, basically you have this equal lows right here. You have to break that, and you confirm more of the downtrend on this. So we will be looking for a lot of shorts on small caps and financials, because if like 20-something% of the Russell is regional banks and whatnot. So financials. Speaking of, one of the sectors that I'm looking at is financials on the weekly, XLF. All right. So this is very bearish, but what we have on the daily here, right? The CPI jump into those equal lows. So you can tell that this area, I mean, it's getting bought up, but you're getting back into it. And once this level area breaks, you're probably going to see some downside on financials. And I've seen some that's if, I mean, unless we get a bounce, right? But I seen some setups on like Wells Fargo where you already pointing out. I mean, this already close below all this what you would call demand area. Bank of America as well, like it's at the lows right here, so it's possibly it's an area to watch, right? To put alerts below all this right here for possible shorts, right? Given that, like, if you look something like at the Bank of America weekly, you'll notice that this weekly candle is still inside the prior weekly range. And I could imagine, like, if tomorrow and the next day become very very days for financials to actually be some weekly candle like this, right? A tail at the top with breaking the lows right here. I have a major support around 39.26 right here on the weekly. So, you know, we could get some trades the next couple of days on the downside for financials, and that could be one of my focus until tomorrow for the downside, right? For the downside, there's some other ones that are not that bearish. That it's probably better to like J.P. Morgan. You could see there's a trend line right here. Uh, I mean, when our financials will come down, they all come down, right? But we'll see what the probably the other setups are more bearish. This one moves in a lot more points, so you have to take like a decision in between. Um, so yeah, for bullishness, the only thing I saw that catches my eye is, I mean, we do see healthcare coming in close green today. If you look at the sectors today, healthcare closed 0.16% up while everything was down. So we do see some names that have that are going a little bit crazy to the upside. Maybe Pfizer is extended right here, but had a crazy green candle today, right off the open. And another one that catches that is on my list. I mean, that's been having crazy days is Moderna. It's a very classic setup where it had a balance area consolidation right here. False break to the downside. You open above all this. It means that everybody on their mama that got short and we're happy on these two daily candles are not in trouble, and this squeezes hard to the upside, which also came in the back of news, right? Back of news plus CPI and just the starting point right here, and then after the races. So I think XLV, like I said, I don't know what else is in there that it's very strong. Uh, Not really, you know, not really. Well, yeah, I mean, this one's right here. No one, this one. MRK making another all time high. Um, yeah. So watching this sector, right? Um, X-ray. Can I believe X-ray is still? I played this once. Um, OGN continuation guy. So it's something that I'm watching for on this on healthcare for whatever that could have continuation, whatever is behind UNH something, right? UNH has a two down candles. I can place an alert right here about this candle high for a strat reversal and go from there, right? Get a good lotto, right? If we open above it, boom, I'm an immediate buyer. Um, so yeah, AVV holds, okay. Yeah. So, okay. Now, now we just covered that. I'm not gonna go through every sector right now because, like I said, I let this week gone by, and then next week we'll see what's up. All right, and as of next, I'm gonna talk about a little bit about the FOMC trade. Okami, you're a true believer of the FOMC trade. Thank you. I think last time you went heavy, and you got like 2K as well, right? And this time you went heavy again, but I bet you this time you did it comfortably or not, or I don't know. I think you did it more comfortably. Like last time was probably a moment where you were praying it was gonna be on your favor. Now you walked in thinking like this. I'm gonna get paid. You know, it's time to get paid. It's time to collect monies. Um, I took a few screenshots of the option chain throughout the session. You know, so I'm just gonna go over it. I Let me see if I can get the times where I took him. Um, so you guys can see why do I take this trade. All right, here it is. All right, so this is all mountain time. This is all mountain time. So this is my screenshot right now where I was looking at implied volatility. You say you made less last time and you were sweating. You believe, but I was sweating. Total today you scale in. Okay. You know what I did today different? I scaled out and I uh and I regret. I was selling at different percentage gainers instead of just booking it when I know there's like a peak of an increased volatility, when you get that max profit of 20-30%. But you notice that every time we get more percentage gain out of this, something that I noticed about this FOMC is that implied volatility increased way before those 30-minute window, you know. So because this is the first screenshot that I took, and there was implied volatility was a 107 on on what's it called? It was a 107 on at some point like an hour before. Like an hour before, instead of the 30 minutes, it was like an hour before. So if you notice right here, implied volatility on the put side was 117 and then one around 111 and 118 right here. 111 for the calls, 118 for the puts. So I did notice that the put side was more loaded with implied volatility than the call side. You could see it. I mean, you can see the chain, right? You see the chain on the put side right here, on the call side right here, and um, it was. I guess in hindsight, like if I would have joined an hour before, I would enjoy another 10 extra points of implied volatility. So it is what it is. I have to stick to the rules of the 30-minute window. I think in other occasions when the implied volatility doesn't rise on the 30-minute window, I'm gonna be losing money, and I don't want to see that, right? So this is the first screenshot that I took. Like I said, this is a mountain time. It's just at 11 a.m., which is at 2. Yeah, at 1 p.m. Well, yeah, 1 p.m. Eastern time. Next screenshot, if you like, just put it into your brain. Sorry, 397s at the 411s, right? This is what I'm looking at. About same deltas, 0.22. This is a 0.19, so about the same delta is not roughly the same, right? But because you wanted to get close to the 410s, so I was debating what to get, but I'm gonna go to the next screenshot, which is at half an hour in. This is I'm going into the trade. This is when I bought. So if you notice, implied volatility on the call side, it went from 111 to 114 and 118 to 122. So everything is a little more expensive right now. It did go up at this point. This is what I'm looking at, and I like that the delta is 20 and the delta is 20 on both sides at that moment, because you're moving the SPY was moving in and it went higher, I believe. That's why I don't remember if it dropped, but the deltas balance out. So I like that at this time. I was very strict. Remember we were making a lot of mistakes. Getting a 0.24 delta versus a 20 delta. So at this moment, I'm very strict. We do have to have the same delta, no matter what. So we do see a little bit of increase in volatility. It's still, I remember there was a day that we bought when volatility was already at 140% or 160%, and it still went higher by another 20% or more, you know? So I'm not scared. This is a high implied volatility for SPY, but I'm not scared anymore of buying high implied volatility on FOMC because it can rise even further higher up, right? Maybe one day one, and it's gonna be painful, but up to the moment, it is good. This is half an hour in, and like I said, this is when I'm buying in. I haven't bought in, but this is when this is the price I bought. I think if you look at my alert, this is where I bought. Next, a screenshot is 15 minutes in, 15 minutes before into the trade, 15 minutes before FOMC, and we're looking at this. Well, so if you notice, I mean, I did buy my position right there. And we're looking at the puts being cheaper. They lost around 10 something cents, and the calls gain 30 something, 40 something cents, right? Per call. If you notice, you're in net profitable into the trade at that moment. I think it was up, I don't know, 15% or so into the trade right here. Very cool. Implied volatility on the call side at 128, almost 127. And the put side at 132. So the put side is still being more expensive. And if you notice, like it's just, it's just how this works, right? The market's going up. You're getting delta right here because now you're 25 delta and you're 18 delta on the put side. But they're not decaying that much on the put side because the implied volatility is still rising and it's staying high and higher than the call side right here. 132 to 127. So at this moment, like, we're very well up on this trade. You can book profits and everything. I think I posted it was already 12%, 15%. And obviously, like, in hindsight, like, if you just buy the calls, you're up 40%, 30% or so. But I mean, we don't know what the direction of the market is going to be, and we try to be the neutral into this trade and just apply. And all we're playing on the FOMC trade is for this implied volatility right here and right here to rise. That's it. That's it. We're not playing anything else. Next up, my next screenshot. This is at 11:53. This is right a little bit before the FOMC, 7 minutes. What was it? 127 right here and 132. This is right here 132, and this is 138. So it's still rising. And this is, I think, when I saw maximum profit onto the trade. I don't know. But if you notice, I mean, I bought the put for 102, 101, 102 or something like that, and it's sitting at $1 right now. And the call, I bought it for 93, and it's sitting at 128. And I know it's not a spectacular gains, guys. I know it's not the 100s to 100% gains. But let me tell you, this trade for me has a 100% win rate in a span of 2 years, or more. I think more. I'm not sure. So, I mean, I'm letting the secret out on the work. Now, it's a secret sauce. If you think about it, if you average 12% gain per FOMC, which is like 6 times a year or so, you're gonna end up this will require you to put all of your money into this, right? Or at least get a port that's only dedicated for this. At the end of the year, you'll be up 100%. And I don't know if you can do the math for me, Okami, whenever you have the chance. You're smart, but yeah, I see Celine says in TOS, if you copy the option chain, you can pull up the price chart of the option. Could be easier to the chart of it than the chain. Yeah, I mean, I do it too. I'll do it right now. What I wanted to see you guys is this little tab, the implied bowl. Really, I mean, I know we care what the total the contract is, right? We care, right? Because we know if we're making money or not. So, but I mean, we want to understand why is this trade working? Why did the market go up and the put is a break even? Why? How does that make sense, right? I mean, Imply ball, imply ball rising like crazy in those minutes, man. And it's just because a lot of people are rushing into the market, buying, beating up those contracts, making them more expensive, no matter what the stock is doing or SPY is doing, and bringing those prices up. You know, a lot of people are throwing in gambles. You know, they're throwing bets into the market, and we're happily gonna buy before the gamblers, and we're gonna sell it to the gamblers, if it makes sense, right? Uh, but if you wish, I mean, we can pull up the and look at the option chain at the end. All this stuff that we were looking at earlier, the 411 worthless, the 397 put worthless, you know, and the implied volatility all the way to the 60 something percent. The next days has implied volatility of 30%. Well, I'm pretty sure this contract had a ton of implied volatility into Friday because they have to bake in the FOMC, you know, move. But now they deplete all that implied volatility. So for credit sellers, it's great, right? They hold through all this and they sell all this stuff. And for us, you know, that we're debit buyers and we like to buy low and sell high, right? That's what our goal is. So if we pull up the 411, um, right here, we'll see that the 411 call, like I said, we got it around this time, right? Around this time, and it went up quite a bit. And then we see the FOMC announcement and drop, and those values are never to be seen again. And then we call this ends up being zero, right? So that's what's up now. That the 397 is this right here. So if you notice, the market went up. We bought right here. The market went up. Let me repeat it. We bought it right here, and it went down a little bit, but the market went up. And what did the put do? It went up. It went up as well, right? Into the FOMC, which is this point right here. Now the FOMC, now we drop into the reaction of the FOMC, and there's obviously the price of the. By this time, I sold already, which is like I said, we bought right here, sold right here, break even on the puts. It's part of the trade unless you know where the FOMC is gonna go. I mean, I wouldn't know that there was this in hindsight. You know, imagine just selling the calls before FOMC, holding the puts into FOMC, and then boom, you're up even more, right? But in hindsight, right? But why does this happen when the SPY actually rally up between that time? Like I said, it rally up from this point forward right here, on these candles right here. It's yeah, from this candles right here, 11:30, yeah, to this, all this right here, and the put is still fine, you know. So a little lesson for y'all. And we're gonna keep doing this trade on the FOMC. We bank up to the north of 30 something percent. It was crazy. Both the puts and the calls were like, usually when this trade works beautifully, one of the either the puts or the calls is gonna be a break even, and the other one's gonna be in profit. All the time when we got 30 something percent, both of the puts and the calls were in profit. So it's something to note. Let me drink a little bit of water. I hope it was a. We have 6 meetings and 6 minutes, or do we have 6 meetings only with minutes? Do you know, Kami? Yeah, I know it's 6 times, but I forgot if it's 6 times all in all. So let's see. FOMC days. Look, we have this. Oh, actually, I'm gonna put it on the screen right here. We have this right here. So this is the statement. So like, wait, this is not. Okay, let's see. FOMC meetings. This is 2022. We have in January, March, May, June, July, September, November, December. So we clear the very last one, 13, 14. Okay. So it's 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. 8, 8. We have 8. And fem. Did I put fem? I just don't know when the minutes is. When was the last minutes? It was none of these dates, right? So we can assume November 23rd. Yeah, so we can assume that per every meeting is minutes. There's minutes. So if there's 1, 2, 3, 4, 5, 6, 7, 8, we can assume that there's 8 minutes per. So we can do this trade a total of 16 times. So an average of 10% gain 16 times at a $10,000 account. What does that give you, Kami? Give me the numbers. We have 1, 2, 3, 4, 5, 6, 7, 8 on next year. Oh baby, that's an average of 10% gain. Using all of the buying power. Using all of the buying power. Okay. Okay. If we master this, because I got a 20% this one. Yes, it's conservative because I got a 20% out of this one. We got 30% out of the last one. I'm uh, I'm getting excited over here. I'm shaking, okay, I'm shaking. We can turn $10,000 with a 20% gain to even more. Oh man, this is gonna be great. All I can say is it's gonna be great. Um, I just have to get the guts because I want to do this with 100K. It's just and I there's a lot of stuff that I have to consider because I've been thinking about it. Like um, if I do this trade with a large size, because just so you know, whenever I do this trade, I go in with market orders. There's just 1 cent spread on the SPY. I'm not buying that many contracts, so I just fill in market. But I don't know what size is considered too large that if you buy market, you're gonna be beating up your contracts to basically you're gonna be buying some contracts that are at the market price cheap, and then every time you're gonna be the one bringing the volatility up, to the levels that you're trying to sell. I mean, not to. I don't think I have the size to move options markets, but I do market orders because it's just whenever it's the stagnant, yeah, my limit orders will fail you, but the market order whenever it's moving, just market order that thing, just get in. Who cares? But like I say, I don't know if you're buying 500 contracts. I don't know. Um, no, I'm sorry, 5,000 contracts. How much is $50,000 per? Holy shit! I need a calculator. Am I dumb or what? So 50,000 divided by 100. It's 500 contracts. Yeah, 500 contracts only. Is that what it is? Only 500 contracts? I'm just trying to think. Can you really move up your bid price and fill up, get horrible fills if you throw in a 500 contract order a market? Dude, we just talked about the FOMC trade and you have no idea. We just came up with the perfect plan to come up 100 plus percentage gain on your portfolio by the end of the year with only doing the FOMC trade. That's probably all we need. Why trade anything else? Tell me, I won. I don't know what your name is. I win it. I win it. If you had a trade that was 100% win rate for a sample of, I want to say, 40 trades. I'm just throwing a number out there. You have a 100% win rate on 40 trades of this particular trade. How much money would you put in? And this averages only 15 to 20% gain, you know? But you have a 100% win rate on 40 trades or so. The question is for y'all, actually. For y'all. Full, and I'm not, if you don't want to say dollar amount, you can actually say, uh, you can actually say percentage of your portfolio amount, you know. If you have a long portfolio, I see that still ain't working. If you're like me that don't hold anything and see only this as a money making machine, I went. There's no stop loss. We are 100% win rate on this trade. I'm gonna look. I'm gonna do it just for you because we just talk about. It's gonna be fast. It's gonna be fast. Um, Make sure you pay attention. Wait, Okami, is that right? At $10,000, we after 16 times we can turn it into 46,000. Okay, 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 okay. Next year, we're starting a $10,000 challenge account, Okami, and we're gonna do it every single FOMC. We're gonna end the year with $46,000, and we're not gonna touch that account. It's gonna be separate. Okay. Let me. Okay. Let me show you how we're gonna do this. We're gonna turn $10,000 into $46,000. It's not a oh, I'm gonna turn 500 into $1 million. No, no. This is actually down to the math. This is down to the math, and this is we're gonna show you how. We have 100%. Let me repeat this. We have 100% win rate on this goddamn trade, which is the FOMC trade. We have we can place this trade only on FOMCs, and we found out that you can actually place it during the minutes as well. We have 8 meetings throughout the year, and per every meeting, I believe, correct me if I'm wrong, there's a minutes. There's a minutes, right, when they actually apply the the rate hike or the whatever they're gonna do, right? Uh, so this is during this environment. Hopefully it's like this all the year. I'm gonna try to do some back testing to see that I'm right. If I'm right, you know, on years that the market doesn't care much about the FOMC or rate hikes or all that. That they just that everybody's enjoying zero, almost close to zero rates, right? So, are you paying attention? I win because I'm about to show you the secret sauce. All right. So we do this FOMC strangle every time, right? So the rules are this: 30 minutes before FOMC, we buy a put on a call with the same delta, very close to the price, you know. So we actually bank on the increase of IV only. Yes. So we only bank on the IV. We sell 1 or 2 minutes before FOMC and get the hell out. We don't play the FOMC. Okay. So just to point you out, this is today's SPY option chain with I'm gonna let me look at the times real quick. I took this screenshot. Um, let me do it real quick. Let me find it real quick. When did I take this? Okay, I found it. Okay, I post this. This is on Mountain Time at 11:01, so at 1 o'clock. No, I'm sorry. So yeah, 1 o'clock Eastern Time. So this is 1 hour before FOMC, and you see the implied volatility on the calls. This is the one I'm looking at. Around 20 delta is what I look at. It's at 111% and 118 on the put side right here, which is a 397 puts, 22 delta, and 19 delta on the call side. You see the pricing right here. Next picture, we're gonna look at the. This is right at 30 minutes before FOMC. So this one right here, you see the increase on implied volatility a little bit from 111 to 114 to I believe it was 118 to 122. So you already see the increase in implied volatility. They're a little more expensive. Would have been cheaper to have bought before, but it's not much change, right? And per the rules, we buy 30 minutes before FOMC, as I've done this trade many times, and there's times that I come out break even or not or actually lose a little bit of money whenever I buy before the 30-minute mark. So this is the picture when I buy, and you'll see the implied volatility. You see the pricing. The delta has a fix right here to 20 and 20. And that's because we had a little bit of spike movement, right? Next up is 15 minutes before FOMC. You already see my position right here. And we see at 127, almost 128 on the calls and 132 on the 397 puts. So you see the implied volatility on the puts is rising way, way higher. The puts are a little bit of a loss right here, but not that much if you notice. And the SPY moved up quite a bit. It brought the delta to 18, and it brought up the delta on the call side to 25. So at this point, you notice that the call side is at 131 and this one's at 90 cents. This is 15 minutes in, and I believe at this point we're up 15 to 12% gain on the whole trade. And this is right like 7 minutes before FOMC or so, which is one of the max. I think it went a little higher. I didn't take another screenshot. It went a little higher than this, but you'll see at 132, and this is 138. If you notice, the call side is at 128, and the put side is almost at break even. It's 1 cent below what I bought, right? At 101, 102, the put side. So even though that the SPY actually moved up in that amount of time, you know. So at that point, we're up 20 something percent on the trade, and then it's when I close the trade, right? I don't hold for FOMC. Like I say, every FOMC, this trade has worked, has a 100% win rate, and I'm starting to think that we could, I mean, we could throw some pretty good sized money into this for 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 just a portfolio that only does this trade throughout the year for the 8 meetings that we have and all the meetings that we have. So if we do this trade with $10,000, so Kami did the math for 16 times, 8 times 8 meetings plus 8 minutes, we gonna end up with around $46,000. That's on an average of 10% gain using all of your buying power on the trade. The only issue I think, is that I mean, I don't know how comfortable you are buying zero DTs. You know, uh, you know. I mean, I get to the point that I want to throw $100,000 into this trade. Not because I'm a zero DT degenerate, but no, and I mean, it makes me think, right? I mean, so one of the things that makes me think about it is that look at the 411 volume, 35,000. In fact, let's look at the screenshots. The screenshot right here has the 411 at 21,000 volume. If I buy $100,000 worth of contracts, it will be 500 and 500 contracts. That means that I will be a big part of the volume of that day, that I could probably push the price up myself and screw myself up, buying so much. Um, but I'm down to try $10,000. How much have you thrown in, Okami, on today? Like, how much do you buy? How many contracts do you buy? If I may know, I don't know if I know, if I can know, because my friend went with $18,000 today on zero DTs. You're insane, Okami. I don't. You're going bigger size than I do. We got into the point that we're getting comfortable with this. It's been working every single time. I just need to backtest this on years that we haven't, because I've been doing this year and the last year. I've been doing this for a while, but I just need to see that it's feasible every year. I don't know. As of now, I'm down for next year to to do $10,000 challenge. I mean, my boy's already going with 18K. I just don't want us to be pushing each other contracts. We're probably gonna have to be scaling out little by little or something. We'll see. I did scale out as well. I regret it. I scaled out quite a bit at 12% when it went up to 20 plus percent. Just I don't want to be investigated by the SEC that we're pumping and dumping spy contracts. And I was being sarcastic because you cannot pump and dump spy contracts, not with this size. Yeah, right there and then. I tried to type it faster, Celine, because it was cheaper. I tried to type it faster, but it just I have a broken hand, and just it takes me a little while to get into the position, then type in the alert, and yeah, yeah. This challenge, if we're gonna do that many contracts, this challenge is gonna be I'm gonna do it on Tasty as well. I'm gonna do it on Tasty because we're gonna be buying more than 10 contracts. That way we can use the free contracts above 10 contracts, and then no closing fees. Yeah, I'm gonna do it 10,000. I'm already onto it, Okami. So by January 31st, have that at $10,000 account ready. Or I'm gonna have it. By the end of the year, we're gonna have 50K, or a little less than 50K. Yeah, it was still a good alert. Yeah. Well, it was nice talking to y'all. I got me all excited. I'm curious about the back testing that you did. How far you did it? All the stuff that you did, Okami. I'm glad that you trust the process. Yeah, she's working. And she's working. And actually, you know what I was thinking? And something came to my mind. So to not have that much influence on pricing for buying that many contracts, we can actually spread out on the 20s deltas and the 25 deltas, and have 20 deltas and 25 deltas puts and calls. Half and half on those. Maybe spread out a little more. Who knows? So, given all this information, I win. Tell me, how much money are you putting in? We need to find that out, Okami. We need to find if there was a market where maybe 2020. Thank you, Sky. Thank you for stopping by. I mean, there'll be a point where we'll be putting 30,000 into the trade once the account grows. Fuck it. I have no idea if it works past the 0 DTEs. I have no idea. Actually, I would like to do back testing on SPX. It's just that I get focused on doing my own trading during this when this happens, but probably look into SPX as well, see what it does. But it's just more expensive, and cannot afford that many contracts. I don't know how it moves in your favor. I think it's about the same percentage gain. So going SPX versus a SPY, I think it's not worth it. It's just a SPY is fine. You also implemented a 10% stop on the size. So even though I put in that much, I'm only risking that 1,800, which was going to just in case. Yeah, I get it. It's because we rarely see it down, right? Only if we fill in correctly, we see a max drawdown of what, like 5% or so. And the times that we saw that, we came out like 1% up or just break even. Remember? We'll keep doing this. I'm down. All right. I think that's gonna be it for the charts and chat. Sucks for the people that missed it. It was a great one. Thank you for coming by. Until the next FOMC. Oh, I'll just leave you with a nugget. I'm looking for McDonald's for possible upside because bounce at the daily 20 to down to upstride reversal, consolidation. This basically was a rejection of the 618 right here, but the lows right here is basically a bounce of the other 618 right here, which already kind of played out a little bit, but we're looking for continuation higher into this, right? Because it played out to a 10% extension right here. So I'll be looking for more McDonald's upside if the market decides to turn green. If the market decides to turn red, financials are my best place to short. I'll see you guys. Yeah, I'm gonna set up an investment fund, only FOMC traded, and that's about it. I mean, where can you get 10% gains for 100% win rate? I want to throw $100 million into this. Just kidding. See you guys around. Have a good night. Cubito out.